the nightmare of inflation and the crack in Europe. In the developed economy, profit growth continues to outpace wage increases. Germany, the economic powerhouse of the region for decades, is also feeling the heat of inflation. Inflation continues. Estimates suggest that around 50% of the price increases in Europe stem from local companies passing on higher costs to consumers or due to the inflationary price effect. Earlier this year, the UK's Competition and Markets Authority put some major supermarket chains like Asda, Sainsbury's, and Tesco on watch for alleged profiteering during the cost of living crisis. While these businesses were later cleared of wrongdoing, the perception remains that higher prices are driven by profit-seeking inflation, a phenomenon where companies seek to raise prices to boost their profits. Long-standing high and familiar reality for developed economies, and recently both the United States and Europe have experienced surges in prices. While inflation is receding in the United States, Europe continues to grapple with elevated price levels. In July, consumer prices for food and other items increased by more than 10% in Germany and over 14% in the UK. Businesses play a significant role in driving inflation. In an annual analysis of 70 food retail and manufacturing companies in Europe, management consulting experts at Oliver Wyman found that EBITDA, earnings before interest, taxes, depreciation, and amortization, increased by 11% at food retailers and 12% at manufacturers in 2022, primarily due to rising revenue. A recent analysis by the International Monetary Fund, IMF, also attributes uncontrollable inflation to the greed of businesses. According to the IMF, in 2022, the growth rate of corporate profits contributed to 45% of inflation in Europe. Germany, once the main driver of European growth, may be on the brink of a new downturn as its crucial manufacturing sector continues to weaken. Recent data suggests that after a period of sluggishness since late last year, Germany's output may contract this quarter as the country's factories grapple with higher energy costs and fierce competition from China in key sectors. Recent statistics indicate that inflation in Germany is hotter than in most neighboring European countries. The Consumer Price Index, CPI, in July increased by 6.2% compared to the same period last year, significantly higher than the Eurozone's average of 5.3%. To curb soaring prices, the European Central Bank, ECB, has raised the benchmark interest rate to a historic high of 3.75% and is expected to tighten further. However, the higher borrowing costs have heavily impacted Germany's housing construction sector. A survey by the ETH revealed that over 40% of construction companies polled reported a shortage of orders, significantly exceeding the 10.8% level from the same period last year. The International Monetary Fund, IMF, predicts that the German economy will contract by 0.3% this year, compared to the Eurozone's average growth of 0.9% among the 20 member countries. Germany is also expected to be the only economy within the G7 group to experience a GDP decline in 2023. According to German statistics agency, sales at stores and online retailers declined in July. Sales for the first 7 months of this year dropped by 4% compared to the same period in 2022. Particularly, households reduced their food consumption due to surging prices, with food purchases decreasing by 5.3% compared to the same period last year. Facing difficulties due to reduced domestic demand, German manufacturers are also feeling the pressure in international markets. In July, domestic businesses sold goods worth €130.4 billion to the rest of the world, continuing to decline from June. German manufacturers are also facing more intense competition from Chinese counterparts in industries they once dominated, such as the automotive sector. Gloomy outlook, production, exports, and retail sales in July. The German economy can only escape the current quarterly contraction if it witnesses a recovery in both August and September. However, some business surveys indicate that factory activity in Germany remains weak. According to a survey conducted by S&P Global with procurement managers, factory output in August is currently declining more sharply than in any month since May 2020. There are also numerous new signals indicating that the prolonged decline has spread to other sectors of the economy. Sharing with the Wall Street, La Rubia, an economist from Hamburger Commercial Bank, believes The last ray of hope is that the service sector can continue to provide some stability for the overall economy. But this optimism only exists in the short term because this sector will continue to shrink in the future. The current demand situation can only be described as bleak, economist Stefan Chilb from HSBC emphasized to the Wall Street Journal. According to German statistics agency, factory orders fell nearly 12% in July compared to the previous month, reversing recent increases due to increased defense equipment demand. This is the largest monthly decline since April 2020. It's natural for businesses to maximize profits by raising prices, especially those publicly traded companies facing pressure from shareholders. However, European companies have faced heavy criticism for their slow wage growth compared to consumer price increases. According to the Organization for Economic Cooperation and Development, OECD, corporate profits in Germany increased by 24% from before the COVID-19 pandemic to the first quarter of 2023, while labor costs only rose by 13%. A similar trend can be observed in most European countries.